Hello, Nnael here. Welcome back to my channel. Yeah, how are you today? So let's continue from our last video. So I'm just going to share you my quick outlook for Bitcoin technical analysis using Elliot Wave Theory. So as you can see here, we are right now, in this very time, having a decapitulation and a selling pressure to the downside, which is breaking out from this rectangle that I draw yesterday here as a support line, which is actually, I rather say it's it's actually a correct calculation, but just we have we have a further retracement to the downside. So here I'm going to first, as I told you before, that if we are breaking below this parallel channel here, we will be having a major downside reaction, like what I told you in my last video. So first of all, I'm going to remove this rectangle now. Yeah. And we will be recalculating this wave placement. So we have an A wave here. So this is an A wave of this 1618 Fibonacci retracement. So if we take a look at this 15 minutes impulsive movement here, we have a 1 1 2 and a 3 here, and a 4 and a 5. From this what you call it, impulsive minuscule wave here, we are able to consider that the A wave is actually somewhere around here. So I'm going to move this A wave first, and this W, let's remove this W wave and the C wave here. So considering that this is the complete 5 minuscule impulsive wave here, so this might become the A wave here. So this is the A wave, and we have an ABC here, which forming a B pattern here and a minuscule. So I'm going to remove this ABC pattern here, and another complete 5 wave from this 1 2 3 4 5. So this is going to be the C wave here, and this micro, we don't need this, so I'm going to this micro, I'm going to remove it, and also this micro impulsive wave, I'm going to remove it as well. Yeah. So we are going to recalculating the pattern here. So we have the complete ABC correction from these, let's say 25,200 high here to this point, the second minuscule impulsive wave. So it marked the C wave here as complete, and we have the ABC correction to ABC to X wave here. This will be the X wave, and we will, in order for this X wave to be complete, we still need the WX, the Y wave, which inside the Y wave there will be a 5 minuscule impulsive wave and another ABC and another minuscule. So assuming that this is ABC to X here, so we have a 1 2 3 4, and we need a 5 here to A, and ABC to B, and another 5 impulsive wave down. So 1 2 3 4 5 to WXY here. So you got the picture of what I'm trying to say, right? So in order to make this valid, and this WXY correction valid based on this minuscule impulsive move, we still need the, so this might be the second A of the ABC corrective pattern from the X point, and we still need the B wave, which inside the B wave we will be having an ABC corrective pattern, and the C wave, which is also including a 5 minus cool impulsive move down. So in that scenario with WXY corrective pattern, we still missing many waves. So now let's take another look if we calculating the move for this. So this 161 Fibonacci retracement here is we are able to say this as a valid impulsive move to the third wave here. So we are actually able to move this based on the calculation that we just did to this point up here. So we will be having the third minus cool impulsive move in 15 minutes time frame around there, and this will be the 4 minus cool impulsive. In order for us to know about that, we will be so it's almost 1618 Fibonacci retracement to complete the 4 minus cool wave, and this will be the fifth, somewhere around 50% Fibonacci retracement here. So the fifth wave of this minus cool impulsive move is actually somewhere right here. So with that being said, this will be the A wave of this corrective pattern. So we have an A here, and now we have this another ABC minus cool ABC corrective pattern from this point of view. A will be right here. So this is an A, this is an A, definitely this is, oh yep, this is an A right here. We have the B right here and the C right here. So this is an A and this is a B. Is that correct? Oh no, sorry, I mean we have a higher B here, so we have an A, we have a lower C here. So this is an A, B, C, which is make this as a B. So, and also we can calculate this as a 5 impulsive move down, as I said before. So let's go to the 5-minute time frame first. Now we will see the 5 impulsive move from here. Let me show you, and this is actually the 5 impulsive move. So we have this from the C point of view. We have a 1 here and a 2 right over here. It's 1 2 1 2, and it's a 1 2 1 2, and it will be a 1 2 4 5, something like this, and keep this a 5 impulsive wave. So let's get back to the 1 hour time frame. Okay, now where are we? Yeah, so the C will be somewhere up. Sorry, I mean this will be the C wave. Okay, with that being said, we have we back again at our first setup, which is a W here and an X here, which is including a 5 impulsive move up. So let's put it right there. So this is a W. Oops, sorry, I mean a W is not right there. So this is a W, a complete ABC pattern is a W here, and we have an X right here. So we have a Y over here. So this is might be a Y here. Okay. Now what I'm going to tell you is something like this. I'm going to put it. Oh, sorry, I'm going to put it right here. Something like this. So we have an A, B. Oops, sorry, that's not what I mean. We have 1 2 3 4 5 to an A, and A B C to B, and 1 2 3 4 5 to a C, which forming a W pattern here. And we have an impulsive minus cool wave to complete the X wave here, and inside the Y wave, the last wave of this corrective pattern, we have a minuscule impulsive 1 2 3 4 5, which is an A here, A B C to B, and 1 2 3 4 5 to Y. So that's a valid count. Okay, now that we have so we can mark this as an A, and this is a B, and this is a C. Okay, I will mark it as sub microwave here. Okay, so this is a valid count that we have here right now. Corrective pattern here. Sorry, let's unlock that first. Okay, we have a corrective pattern here, right here. So okay, where did I get this corrective pattern from? Let me show you this first. So yep, something like this. I'll lock it and let's put it inside this block. Okay. So as you can see now that this is a fifth minuscule movement in wait, it's what's this? Oh, sorry, my connection is dropped. I'm sorry, my connection is dropped. Okay, let's continue. So we have this a 15-minute minuscule impulse. The minuscule wave here is in 15 minutes chart, as you can see here. So let's hide it. Okay, so what the hell is wrong with this? Okay, so let's continue. Now let's calculating the N wave of this selling pressure. So we will be pulling a trend line from this from this height here, which will give us an exactly 161 Fibonacci retracement at around 21,700 here, and actually break it. So I'm going to show you the real one, the what you call it, the valid wave count. So we have from this Y wave here, from this complete 5 wave here to this, we will be having 1618 as our third impulsive move target from the corrective wave down here, or the impulsive downward movement. So we can assume now that this third wave here already complete, and we are still missing the fourth wave. Actually the fourth wave has already been complete, and we are still missing the fifth wave of the C wave of the Y wave here. So I'm going to tell you how I calculate this four wave that it market as that it has already been complete. So it's something like this. So from this A wave right here, we can just pull it like this. So this four wave right here is actually 1618 Fibonacci retracement from the corrective pattern of this A, B, of this of this not like that, of this A B C pattern here. So correct pattern, this is the valid count for this 4 minuscule impulsive wave. And then we will be having the fifth wave of this C corrective pattern, of this Y corrective pattern, will be somewhere around 50% Fibonacci retracement, or 0.61 Fibonacci retracement, which is around 21,100 here, which the ideal target also marking with this trend line over here. So this trend line is really strong because this trend line is coming from the latest low of $17,000 of Bitcoin price back in June 18. So that's, I can say it's a strong support for Bitcoin in order for Bitcoin to finish this corrective move down. So if you want to wait, we will be having a downward to complete this 5 minuscule impulsive wave of this C wave corrective pattern, of this Y wave corrective pattern. So if you want to take a long position now, just wait. At least you can wait until you will see a bullish divergence inside this RSI channel. So we are still haven't seen any bullish divergence here. So the bullish divergence here still not okay. As long as you see a bullish divergence here in 1 hour time frame, you are safe to go long, my people. And I'm going to show you the target if you're going long from this around 21,100. So the target for you if you're going long from that will be accounted from this low here of this 5 micro impulsive move to this sorry, I mean from this low here around 21,100. So this is 21,100. So this right here will be the target of the third stop microwave from this movement up. So you will be having a target around 25,500. Okay, if you calculate it based on this. So but but since the what you call it, the calculation in this part is already changed because it breaking this low here, and we cannot count it as our starting point impulsive move to the upside wave. So we cannot calculate it like this. So we will be having this around when around 2800 golden pocket of Fibonacci retracement from this what you say it from this, okay, from this, yeah, this is a golden pocket. The golden pocket Fibonacci retracement, no, something like this. Okay, this is a golden pocket Fibonacci retracement. So this is your next target. So this our starting point of the third wave of the second wave. Okay, and to 20, let's assume that it's 2100. So this will be your target, 30,1618 Fibonacci retracement. Okay, so if we see a reversal with a big impulsive movement upside, then we can make sure that that impulsive move will be our way to finish this 3-minute impulsive wave. Okay, so we still have this one wave here and the second wave here, and we are going to this third wave of this minute wave, impulsive wave. So yeah, that's my perspective, that's my point of view. And also let's go to the daily time frame here. I'm going to show you something really interesting. As you can see here, okay, let's make it a little bit bigger now. As you can see here, we have the M pattern of this wave here. This is the M pattern. So what happened after this M pattern? We will be having a rally to the upside. Okay, assuming that we have a very strong support line here which is come from the latest low of 17k. So that's fair to assume that after this M pattern, so what happened before, we have this M pattern right here. So if you can see, this is an M pattern, and after that we have touched the support also, from the support from 17,000 dollar, and after we touch it, we have been a rally to as high as 24,200. Okay, so that's this pattern is really something. It will make, I think I'm confident enough to say that we are going to 28k or 30k of that 1618 Fibonacci retracement that we just calculated. So yeah, that's my perspective point of view. So let's go to the bear case scenario now. In the bear case scenario, what we have here, in this bear case scenario, will still be having the same, not usually. So we are now in our direction to complete this third wave here. The third wave is already complete based on the Fibonacci retracement that we just calculated. Okay, so this third wave here already complete. We are now in our direction to complete the fourth wave, or I can also say that the fourth wave of this sub-micro impulsive movement down here is also already been complete somewhere around here. Now we are going to the fifth wave, and to finish this first intermediate impulsive move down, to complete the fifth wave of this impulsive move down to the downside from the 69k high. So the four already complete, and we are now in our direction to complete the fifth wave. So the bear case scenario still be in play, and if we want to take a look for it, let's hide this wave first, and if we let's take a look for it. So we will be having this as our target for the corrective pattern. So after the first wave here, we will be having a what you call it, a correction of a micro ABC pattern somewhere around here. So this 2.382 Fibonacci retracement will be oops, I'm so sorry, that's not how I calculated. So it's something like this. So let's see it. So from this, so we have a 1 here and a 2 here. So from this 2 here, okay, for this, from this, yeah, something like, oh sorry, not like that, oh my goodness, something like this. Oops, is it correct? This is not correct. That's not correct, I think. So which one it is? This one is. So yeah, the golden pocket, it will be around this Fibonacci resistance, the Fibonacci retracement from 0.382 or 50% or 618 Fibonacci retracement. So after this 5 wave complete, maybe we are, the corrective pattern will be something like this: A, B, and C, somewhere around here in this golden pocket of Fibonacci. And we will see that the decrease of the volume and the bearish divergence inside the RSI and the MACD in the backday also, that we can know if that's suggesting the second wave of this sub micro of this intermediate microwave already complete, and we are going to the third wave of this intermediate positive move to complete the fifth wave from the 69k. Okay, that's my perspective for the bearish scenario. So yeah, okay, I think we are still in our, what you call it, in our right direction. So so with that being said, let's move this. Let's not go. It's Okay, so please bear in mind that this is not a financial advisor, and you do it with your own risk. Okay, so I'm not responsible for your money, and I hope you like the update. Don't forget to hit that like button and subscribe, and see you again in the next video. Bye bye.